Hello and good morning. You're watching The Mining Show on Core Finance, brought to you by Blytheweigh. I'm Charlie Gibson, and it is arguably the first day of spring today. It is Thursday the 22nd of March. I say it's Thursday, perhaps I should say it's Thor's Day, and that might give you a clue as to our next guest. And if you were invested in this company, you would have done very nicely indeed. The shares are up from about a penny to about threepence, and with that you probably guessed that I'm talking about Thor Mining. And joining me from the company is its chairman and chief executive, Mick Billing. Mick, very good morning to you. Thank you very much indeed for joining us.
G'day Charlie, nice to be back again.
There's a lot of news in Thor in the last few months. There have been resource updates, there have been, you've moved into new tenements. In fact, I think you've picked up one or two new projects, in fact, since we last spoke. So tell us all about the share price performance.
Oh, well, in the first instance, yeah, we've had some investors been pretty happy over the last few months. For a long time, our share price hovered between a halfpenny and a penny, and if it got to a penny, we were relatively happy. When it drifted back, we were a bit upset. But we appear to have broken out of that cycle, and we did that around October when we raised some money. The share price went up a little bit, some warrants got exercised, and we were able to tell the market that we had enough money in the can to meet our budget requirements to move all of our projects forward until sometime during 2019. The market took that news very well, and we went from around a penny up to 3 pennies. One stage briefly touched 4, but we'll just focus on the 3 pennies right now.
And I see quite a lot of warrant exercise as well. So you're in a virtuous cycle in that because the share price has gone up, you've got more money coming into the company.
That's correct. We've had about £1.3 million come in the last 3 or 4 months out of exercise of warrants. There are still some more warrants outstanding that are in the money that we would expect may get exercised during the course of this year. But whether that happens or not, we're comfortable, and we know we won't have to go out to investors to raise some more dosh for until sometime early next year, I suspect.
If all those warrants were to be exercised, how much more money would come in?
A couple of £1 million.
A couple of million. So that would keep you going for another year or so. So
yeah.
That would actually take you into 2020.
I suspect so.
So tell us, you told the market you've got enough money to last you for around about a year, and as we say, if the warrant exercises go ahead as well, then that might be longer. You've got these 3 projects, haven't you? You've got Molly Hill in the Northern Territories.
Yep.
You've got in Nevada, you've got Pilot Mountain.
That's correct.
And you bought relatively recently, you bought a new project in South Australia.
We have, and yeah, that's our most recent acquisition.
Which is not tungsten, is it?
No, this is copper. Copper at Kapunda. Kapunda is the place where copper mining first commenced in Australia, in any location, as I understand it. And during the late 1800s, a bunch of probably Cornish miners went underground at Kapunda and pulled out some very high-grade ore, 20–30% copper, put it on a boat and sent it back here for smelting and processing. They eventually built a smelter on site, but it didn't last a long time. And they took out what we would say was a very high-grade core of the copper at Kapunda and left a fairly sizable low-grade halo.
What mineral was it, out of curiosity?
It's well, it varies. It's close to surface. It's mainly malachite, which is an oxide of copper, and we then go down into chalcocite, and at depth it's chalcopyrite.
So fairly conventional, actually.
It is, and our approach, because this deposit is right on the edge of town, is to recover the copper by in situ leaching methods. Pump a solution into the ground that will dissolve the copper. It will only dissolve the malachite and the chalcocite. It probably won't do anything of any real effect with the chalcopyrite, and then pump it out again in solution, put it through a solvent extraction or ion exchange process, whichever works at the time, and then produce electro-1 copper.
Now, I've heard of in situ leaching, most typically for uranium in Kazakhstan. I don't think I've ever heard it being used for copper before. Is this novel?
Well, we're not breaking terribly new ground. It occurs in the United States, in Arizona. There's a couple of large companies involved in situ leaching of copper. The one I guess we would possibly compare ourselves with is the Excelsior Mining Gunnison project in Arizona, where they have a resource a little larger than ours, admittedly, but at a very similar grade. They've just published a feasibility study that says they will produce copper at an all-in sustaining cost of about $2,700 a tonne. You compare that with what,
the copper price about
somewhere $68 to $6,800 a tonne right now. There's a fair margin. We haven't done the work to put in a forecast, but I guess a target of that nature is something that we would be thinking about.
I mean, it's certainly true that in the uranium in situ leaches in Kazakhstan, and one of the notable things is they are very cheap. They're right at the bottom of the cost curve because, of course, you don't have to put in all that big infrastructure. You don't need the shafts, you don't need the development, you don't need the adits. One of the key things, you need that impermeable layer underneath, so don't you? So when you pump all the acid down, it doesn't just disappear into the ground.
Well, that is an element. The ground conditions for in situ recovery have to be ideal. And in South Australia, we are a little bit of a centre of expertise for in situ recovery because we have in situ leaching uranium mines in South Australia that have been operating for 15 or 20 years. And the team that we have assembled for this are people who have worked in those deposits. So they know a little bit about what they're doing. I won't say me because my technical knowledge on those things would be found wanting very quickly. But yes, you can manage it, but even without the impermeable layer above and below that we have, for example, at the Beverley uranium project in South Australia, which I know quite well, you drill a hole, you then cement grout below the area of the mineralisation, you ream up through that area of mineralisation, so you put some casing, you grout above it so that the fluid can't go in a whole bunch of places where you don't really want it to go. There's two reasons for that. One, you don't want material going into the water table, into the aquifer, where it's really not going to do a lot of good. And the third reason is it wastes very good product. The second reason, it wastes very good product that you can't afford to lose.
What about the attitude of the local community? Because sometimes with mining, even when something is a known technology, local communities don't like the idea of it happening on their doorstep. And do you have a feeling for how they're going to react?
Charlie, the technical parts of what we're doing at Kapunda can probably be knocked over in a proof of concept capacity in less than 12 months. The community liaison work and getting the community to come along with us is going to take a little longer. The local community and the local government council are generally very positive, but at any broad community sector, you will find a bunch of people at one end of the scale and another bunch of people at the other. We are going through this as sensitively as we can, and our timing to some extent will be dictated by the community reaction and how well we bring the community along with us.
So, Charles, you've got these three projects. Obviously, we've been speaking about Kapunda up until now, but if we look at Thor as a whole, how is it going to move forward over the next 1 to 2 years? Okay.
In the first instance, the project most ready for production is Molly Hill. We produced an upgraded ore reserve in January, and we are working away now at upgrading the bankable feasibility study, and that should be, we believe, complete within the next few weeks. There's some interest in the project from a whole bunch of people who want tungsten concentrates around the globe because those processes of that stuff right now are screaming out for feed. They don't have enough of it. So we would hope we can get finance for Molly Hill sometime this year. I'm not going to guarantee the outcome, but compared with 3 years ago when we had a crack at this, we have an ore reserve that's no longer 6 years, it's 7, plus another year or two of underground. For the first time ever, we know we can mine profitably some of the resource that is underground and not inside that pit shell. We have a tungsten price that is going up, whereas 3 years ago it was heading
Not
downwards
going
at a dreadful rate.
Yeah.
So I'm relatively optimistic about our prospects for getting finance for Molly Hill in the near term.
So is that the next big catalyst that investors need to look for?
I think that's a critical catalyst for that. You know, we're working on all three projects, and at Pilot Mountain we are also pushing that one ahead as well. But Molly Hill is the one that is likely to generate production revenue, hopefully profits, and maybe even dividends before the other two.
Okay, and between the other two, between Pilot Mountain and Kapunda, which one are you advancing furthest, fastest?
Possibly Pilot Mountain. We are doing some work at the moment. We've done metallurgical test work on this some time ago. Know we can produce a saleable product, but right now we are working on the next phase of that test work to take the outcome and the results through to equipment specifications required for pre-feasibility study. We're doing the scoping work that allows us to go off to the regulators and start planning for the environmental and the other regulatory approval processes for Pilot Mountain. It's not going to get approval, and we're not going to have a feasibility study out this year, but if we don't make a start now, we'll never get there.
And the United States is making life a little bit easier for you as a potential tungsten producer. They've talked about tungsten being a strategic asset. I'm sure it must have been a strategic asset in the past, but they've talked about it again.
Yes, in February they released a list of strategic commodities, and yes, I have done this in the past, and tungsten is included in that list of strategic commodities. There is no tungsten mining production in the United States, or for that matter anywhere in North America right now. There are two reportable resources. Ours is JORC, the other one is 43101 because it's the North American standard, and I would have thought that ours is well and truly in front of the other one. And if we look at the size of that resource, we've got an interesting set of numbers at the moment. We've got 32,700 tonnes of tungsten in the ground, and the current price is $32,700 a tonne. And that's a fairly big number if you multiply the two together. Well, one shouldn't do that, but I just did, I guess.
As the Americans might say, do the math.
Indeed.
All right, Mick, thank you very much. I'm afraid that's all we've got time for, but that was Mick Billing, the Chairman and Chief Executive of Thor Mining there. And as you heard, the first project there that they're looking to develop is Molly Hill in the Northern Territories, and that's the one that they're going to be looking to finance later this year. I'm afraid, as I say, that's all we've got time for, but this is me, Charlie Gibson, signing off from the Mining Show, brought to you by Blytheweigh on finance. Mick, you must come back again and join us on another, to come back and tell us how it's going soon, preferably on another Thursday, or should I say Thursday. And until then, you have a very capital day.